not just audit, but tax work papers as well. We used to call them TWRPs. T-R-W-P, tax return work paper. And what were the, well, they gave 4 exceptions. I didn't understand them on technical standards. What were the other 3?
Peer review, subpoena, and obligations related to technical standards.
Okay, well, then what was the other one? A response to the AICPA Ethics Division.
Oh, yeah.
Okay. All right, let's keep going. Let's keep going. This is not getting stimulating. 4-21. Yes. I've been waiting for this. Okay. All right. For each of the following situations, this is similar to exam type questions, by the way, this one and the next one. So maybe we'll look at that a little today. Well, we'll see whatever. We're just enjoying the afternoon together. 4-21. What's the rule that's involved? Is it a violation? If not, why not? If it is, why, etc. MRIC, CPA provides tax services, management advisory services, and bookkeeping services, and conducts audits for the same non-public client. Because the firm is small, the same person often provides all the services.
It's not violation.
Okay, it's Rule 101.
Yeah.
It's Rule 101. And basically here, not a violation. Now, just between us, notice because it's a non-public client. The only thing that disturbs, so it's not a violation, although it'd be better, it says if we could be, often the same person provides all the services. As you were talking about earlier, if you're doing the financial statements, can you really objectively audit them?
No.
So that's why Amanda was pointing out how at least those functions are being split apart. One person doing the financials and somebody else auditing them. Now, somebody could do the tax work and everything here, could do bookkeeping, the management advisory services. They could all be done by the same person, and then have somebody else do the audit. But anyway, it's not a violation because it's privately held. Rule 101 is correct. Then we have Franz. So he's a CPA but not a partner, has 3 years of experience with a CPA firm. He owns 25 shares of stock in an audit client of the firm but doesn't take part in any of the audit of the client, and the stock's not material relative to his total wealth.
Rule 101. No violation.
That's right. Now, would it matter? Would it matter if the amount of stock that he owned was material relative to his total wealth? No. No. Barry's right, because he's not involved in the audit and he's not a partner. Okay, C. Non-audit client requests the assistance of Wilkinson, CPA, to install a local area network. Oh, this is an interesting one. Wilkinson had no experience in this type of work and no knowledge of the client's computer system, so he obtained assistance from a computer consultant. The consultant is not in the practice of public accounting, but Wilkinson is confident in his professional skills. Because of the highly technical nature of the work, Wilkinson is not able to review the consultant's work.
Rule 201, and I think it's a violation because they don't have any experience in the industry.
Now, that's the official answer, and I want to add to it, though. That is, they're looking at 201. I would also like to add, I told you I was going to differ from some of these answers. I would also like to add 102. 102. Do not take on an engagement unless you yourself could do the work. Now, you don't have to do all the work. You can refer some of it out. But you have to be able to review the quality of the work. This person doesn't have a clue in how to handle IT area networks. So they won't know if the other firm is doing a decent job or not.
Why would an accountant be involved in that sort of thing?
Well, it's not an audit client, so conceivably they could be. If you have somebody with IT expertise in your accounting firm, this could be a lucrative source of revenue. And you can do it for non-audit clients. But that's the key factor. Do not accept an engagement unless you yourself can adequately supervise the work. So the official rule that Amanda gave it is 201. I would also like to add to that 102. Other ideas on that one? Did everyone get that? I thought that was trickier. Okay, and letter D. Here we have preparing the personal tax returns for a client. Sarah observed that deductions for contributions and interest were unusually large. She asked for backup, and the client says, "Ask me no questions, and I'll tell you no lies."
I think it's Rule 201.
Okay, Millsap completed the return on the basis of information acquired by the client. Well, which rule did you have?
201, because she didn't get enough relevant data.
Maybe, you know, you could use 201 for almost all these. I like a different rule here.
That's a disclaimer opinion, right?
Well, no, it's a tax return.
Oh, okay.
But by the way, just some of you have taken taxes with me. Remember, this looks like it could involve Circular 230. Remember, you got to be careful here. You could be held civilly or criminally liable for aiding and abetting the understatement of tax liability. So that's not what they're asking for in here, but watch out, you could run afoul of the IRS. I think this is, you basically know the client is lying. So that would involve your integrity. Yes, there you go. Amanda knows what I want. 102. 102. Now, it's interesting in the legal profession, when we're talking about a case, you know, not a tax situation or audit, a lawyer, you might start confessing, and the lawyer says, "Stop. I don't want to hear it, because if I hear it, I'll have to report it." So, you know, so there they may ask you to turn mum or whatever it is. Everyone set? Stop me here if you need it. Okay, all right. I thought these were kind of fun. All right, we have Roberta here. She is controller of the U.S.-based company, which has a significant portion of its operations down in South America. Certain government provisions in selected countries require the company to file financial statements based on IFRS. She oversees the issuance of the company's financial statements, asserts the statements are based on IFRS. However, the standards she uses are not those issued by the International Accounting Standards Board. Now, this one I personally did not know.
202?
So I had to look this one up, and let me see. This is letter E. They have rule, now this one I did not know, I'm sorry, Rule 203. It says here, this rule designates that the International Accounting Standards Board, the IASB, is the established body for issuing international financial accounting standards. Roberta's assertion that the financial statements are based on the International Financial Accounting Standards would be in violation of Rule 203 because she did not use standards issued by the IASB.
So what's the difference with 202 and 203? Because when I'm reading it, it looks...
To me, all three of those, 201, 202, and 203, intermesh and blend together. This is new, by the way, in this edition of the text, because, let's be honest, the IFRS standards now are becoming more and more prevalent. So they're saying here, Rule 203, Bill didn't know this one himself, Rule 203, because she did not follow the standards issued by the IASB, she cannot truly present an opinion as to whether the international standards were complied with. which means she should have done what?
Use the right standards.
Use the right standards. You know, it looks to me like the work she did is going to be worthless because she didn't follow those standards. Okay. Letter F. Oh, yes. Okay. Here we have an individual, Steve, set up a casualty and fire insurance agency to complement his auditing and tax services. He does not use his own name on anything pertaining to the insurance agency, and he has a highly competent manager who runs it. Customer often requests Long to review the adequacy of a client's insurance if they are deemed to be underinsured, and every client is always found to be underinsured. I added that. He believes he's providing a valuable service to clients by informing them when they are underinsured. Excuse me. A violation of what rules here?
301.
That is not part of the answer, but that is something that I would add. Yes, now that's not in the official answer, but I like it. 301, because you are sharing some information with a third party, although they work for you, at this insurance company without the client's authorization. So add 301, definitely. I used to have that in my annotated solution. What other rules?
I can't remember what it, because you said they can't have like more than one business.
Well, the thing that stinks here is that providing this extra service primarily is it for the benefit of the client, or is it to develop additional fees? It sounds like a 101 violation to me. 101. Because you remember, we're forbidden for doing insurance services, and this seems like a way of trying to avoid avoid that scenario here. You know, getting around the Sarbanes-Oxley. They also have down 102. They did not have 301, but I like 301, and I think Amanda deserves special plaudits for that. They have Rule 101, independence, Rule 102, integrity and objectivity, violation. Appearance of independence has been impaired by Steve's agency's financial dealing with his audit clients and his participation in a business which impairs his objectivity. It also is a conflict of duties to recommend his own firm to review the adequacy of the existing insurance coverage of existing clients. And then I would bring up the confidentiality that Amanda mentioned. What you might do to avoid part of this, if a client is really underinsured, then give them the names of many insurance agencies who might be able to alleviate that problem. And don't list yours first. Because remember how when there's a ballot for voting for a political office, they have a drawing to see whose name appears first. If your name appears first on the ballot, that automatically will give you 20% more votes than if it were last. So give the names of other possible agencies as well. Don't even mention your relationship with this one agency. But I like the 301 aspect as well. Letter G, 7 small Seattle firms have become involved in an information project by taking part in an inter-firm working paper review. This is not part of the peer review program by AICPA or Illinois CPA Society. Under the program, each firm designates 2 partners to review the audit files, including the tax returns and financial statements of another CPA firm taking part of the program. At the end of each review, the auditors who prepared the working papers and the reviewers have a conference to discuss the strengths and weaknesses of the audit. They do not obtain authorization from the audit client before the review takes place.
301.
That's 301. Now that sounds great, doesn't it? If it were part of a state-sanctioned peer review, it's fine. You don't need permission. But apparently it's not part of a state-sanctioned or AICPA-sanctioned peer review. Hence, that would be a violation. Yes.
If it is a state-sanctioned peer review, is the second firm then bound to keep that confidential as well?
Oh, yes. Confidentiality would apply, but you would need authorization to share the work papers.
Right.
Now, it might be a good idea in your engagement letter with the client, however, to include information saying that the audit papers which we prepare might be reviewed as part of our mandatory peer review. In other words, so you're not specifically requesting the permission, but you're letting the client know that this may occur. Archer stayed longer than he should have at the annual Christmas party. He went through a red light. He was intoxicated. He's found guilty of driving under the influence. He was sentenced to 30 days in jail. Obviously, this is not Illinois, because they never go to jail here. And his license was revoked for 1 year.
501.
501, acts discreditable.
And which one? This is H, right?
This is H. H is 501, discreditable act. Now it says this rule is vague and the interpretation would be made by the State Board of Accountancy. In most states, this will be a civil action and would not likely be a violation. I would agree with that. Illinois will never find that to be a violation.
Just by reading that though, it says to their profession, I would say like, okay, a police officer who's getting stopped for a DOI, that would be like, okay, he's trying to tell people not to drink and drive, but he's drinking and driving.
No, I mean, I like your answer about a violation. Now, Joan put in your no violation, Rule 501. That's what they say. I don't like it either. All I know is that being cynical in Illinois would not be deemed a violation. But on an exam, if you said whether or not it's a violation would be determined, and mentioned the state board and the argument that you presented, you would get full credit from me. Now we actually have the same thing again. Maybe it might be warmer in here if we had the door open. Do you think that would help?
No, this whole building's freezing.
Okay, all right. It was just a thought, because
The classroom right next door, you can adjust. This is the only room that you can't adjust the temperature, but next door you can.
If you want to go ask Keith to adjust it or something, feel free.
Who's Keith, the security guard?
Keith Davis, that's his room.
Oh, he can adjust for this room too as well?
Well, I think he might be able to, but then again, there's usually a key that you need to unlock that, so I just have to remember, I'm not, when it's 100, it's supposed to be 100 degree out, heat index, I don't think about, bringing a sweater or jacket. Maybe I should leave one here at my cubicle or something, so I'll have it. Jeez. Okay, same kind of thing for the next problem. Let's go to 422. Audit firm of Miller and Yancey. They've joined an association of other CPA firms to enhance the types of professional services the firm can provide. Miller and Yancey share resources with other firms in the association, including audit methodologies and audit manuals, common IT systems for billing and time reporting. One of the partners in Miller and Yancey has a direct financial interest in the audit client of another firm in the association.
101.
Yeah, this is a 101 violation because of that last sentence. They have a direct financial interest in the audit client of another firm in the association. I don't think this would be a major issue, except for maybe regional CPA firms, because they usually don't have associations. Your big four and then your next tier of CPA firms usually are not involved in this. But 101 violation, it does say when audit firms create a network with other firms to share certain characteristics, such as the sharing of audit methodologies and audit manuals, interpretations of Rule 101 require each network firm to be independent of audit and review clients of other network firms. The ownership by Miller and Yancey, who are partners in one of the network firms, in the stock of a client of another network firm would impair independence. Let me just comment on that. The major CPA firms have their own standards. They have their own accounting standards manual, their own training programs. Often they use their own self-created software. So this is not an issue for any of the big four or the next second tier. This would be smaller firms congregating together to share resources. And that could happen. I mean, there's some CPA firms that are just regional firms that deal in one area of the country and would be doing audits and so forth. Okay, letter B, we have Bruce. He's the audit manager on the engagement of Xylium Corp. It's a public company. In structuring the agreement with the audit committee for the audit of the financials, Sullivan included a clause that limits the liability of Sullivan's firm so that shareholders are prohibited from using Sullivan and the firm for performance issues associated with the audit. Okay. So let me just read it again. It limits, he's limiting the liability of his firm so that shareholders cannot sue him. Boy, that's an interesting idea. In the audit engagement letter, something that says if I screw up or something, I can't be sued by the shareholders. Ha! Oh, interesting, you can get away with it. All right, what do you think? Can you put in there that you are exempt from being sued?
Is that a contingency that's not a fee?
It's not under that section. This is new. This was not in the prior editions of the text. Amanda, what did you have for this one?
I didn't know that one, to be honest with you.
Well, it's an interesting idea. They have down violation of Rule 501. It says you can't include limitations on liability or indemnification clauses in your engagement contract. You cannot include any limitations on liability or indemnification clauses. I would say in your audit engagement contract. But that would be an interesting approach. No matter what work I do, no matter what rules I violate, I am absolved from being sued. Ha! Jesus. All right, let's look at C. Jennifer, that's also new, that was not in the prior edition. Jennifer Crow's audit client has a material investment in Polex. Jennifer's non-dependent parents also own shares in Polex, and Polex is not a test client of Jennifer's firm. And this is not significant relative to Jennifer's net worth. Okay, what do you think?
101, and it's not a violation.
That's right, 101, no violation. I just would, that I think is clear. I just want to comment on one more thing. I'm going to add something to my model answer. Let's change the facts. Well, let's not. Okay. No violation here. Well, what I was going to say is this. Would it matter if Jennifer's parents resided with Jennifer?
If they were her dependent, it would.
If they were, that's the thing, because they'd be members of the household.
Right.
That was the only thing I wanted to mention. All right, we have Joe Stokely. This is letter D. He's a former partner in a CPA firm. He left the firm to become COO of Lacey Foods, which is an audit client of his old firm. In his new role, he has no responsibilities for financial reporting. And the old CPA firm made significant changes to the audit plan for the upcoming audit.
101.
Okay, any violation or not?
Yes. Because he didn't wait a year.
Well, no, yeah, I agree with that, although they don't show that in the model answer. It didn't say how long he waited, but I like that answer. Rule 101, if he did not sit out a year, it would be a violation for him to have joined the client.
But
If he did sit out a year before he joined the client, no violations. And the official answer said because he has no responsibilities for financial reporting, and because his audit firm modified audit procedures to reduce the risk that Joe has knowledge of the audit plan, independence would not be impaired. Let's talk about that. The part that intrigues me is the part that the firm changed the audit program. The firm made significant changes to the audit plan. The thing I'm questioning is, would that have actually been required? Yes, Joe knows what the audit programs consisted of because he was on the audit. But if he sits out a year and joins the client, does the CPA firm really have to change their audit programs? I don't see that being an issue. I mean, because the audit programs are going to stay relatively consistent from one year to the next if there hasn't been a change in a lot of the operations of a particular business. So this model answer stressing how, yes, the CPA firm made major revisions to the audit programs or the audit plan that they performed, I don't think that's necessary. The 1 year sitting out period that Amanda mentioned, I think, is relevant here. And I certainly am impressed by the fact that he has basically no responsibility for financial reporting.
yeah, but he's an officer.
Would it matter if he became the head of internal audit?
Yes.
I still don't think it'd be a violation if he sat out the 1 year. Because at the head of internal audit, he's probably going to rely on some of the old audit plans that were true at the CPA firm. So I guess I'm seeing this in a lighter sense than the model answer is. Anyone else have opinions here? Okay, all right. That again is a new one. Okay, O'Donnell, letter E. I'm going to switch my solution is for the next edition. And so this letter E in the next edition is letter F. O'Donnell Incorporated has struggled financially, has been unable to pay the audit fees for the 2009 and 2010 audits. I have a question for you. If they didn't pay you for 2009, why the hell did you do 2010? Excuse me, that was a business question. Seal & Seal is currently planning 2011. Well, when someone, this was in the textbook, what's the rule when someone doesn't pay you any fees? So
You're supposed to drop him as a client.
That's right, so it's Rule 101. If they owe you fees, or if they brought a lawsuit against you, or you're going to bring a lawsuit against them, you can't be independent. Rule 101. Just personally, if you set up your own firm and you don't get paid for 1 year, don't do the work for them the next year.
Or the next year.
Or the next year after that, yes. All right, letter F. And what's back here now? On that one that we just did? No, letter E is violation.
Why?
Because you can't be independent if unpaid fees are owed to you by the client. Connor Bradley is the partner in charge of the audit of Southern Pinnacle Bank. Bradley is in charge of purchasing a beach condo. He's in the process of buying a beach condo and has obtained mortgage financing from Southern Pinnacle. What do you think?
I don't think it's a violation of like independence. I Am I wrong? I don't.
Well, the thing that disturbs me is that he's the partner in charge of the audit of the financial institution that he wants to approve his mortgage.
Right, well, that is that.
That's the thing, and let me check the model answer here. Violation of Rule 101, only pre-existing mortgages provided by a new audit client that is a bank are permissible. No new mortgage loans are permitted. It's the idea that one of the CPA firms I worked for, which was a national firm, Wolf and Company, we represented 90% of the car dealerships in the entire Chicago metropolitan area. Let's say I remember PackyWeb Ford, where I bought one of my cars many years ago when I was not working for them, was one of our clients. Let's say I went to PackyWeb Ford and I was working on the audit of PackyWeb, and they give me a 40% discount off the sticker price. Wouldn't that appear to be influencing my independence? So the issue here is the mortgage. They're saying a pre-approved mortgage before this was a client would be fine, but no mortgages or other enticements after that time. Letter G, Jessica has been serving as a senior auditor in the audit of Carolina BioHealth. Because of her outstanding work, the head of internal audit extended her an offer of employment to join the internal audit department. That would have been very, very typical in one stage. However, it says when the discussions with Carolina BioHealth began, Jessica informed her office's managing partner and she was removed from the audit engagement.
101.
Okay, let me check this one out here. That's letter G. Oh. Now, Amanda mentioned Rule 101. Notice here, when the offer was made, she immediately informed the partner, engagement partner, managing partner of that office, and she was removed from the audit engagement. What if you're on an audit and a client tries to offer you a bribe, which you refuse, and you immediately contact the managing partner of the office of your firm? No violation. Now I'm trying to think of the rule that might be applicable here. Notice because she told the managing partner, what if, and this would be 101 that you're mentioning, Amanda, what if this offer was made to her, she does not tell the managing partner at her office, but she tells the client, I have to sit out a year, but then yes, if the offer is still open, I will accept it. That, I think, would be the 101 violation. Even though she set out the year. Why? Because the idea is that if an offer was made of employment after the 1 year sitting out period, that could influence her not to be objective. So I like 101 in that regard, but what she did here, no violation. And she contacted the managing partner who said, you better remove yourself from any further work in the audit. And I think anything she did on the audit up until that time is fine because there had been no offer made.
Is the sitting out a year mean just sitting out of audits or any business with the client?
No, you just can't go to work for that client.
Okay.
She could continue to work at the CPA firm as long as she was not on the audit, or she could work for some other company, or she could work for.
She can't do any financial services for that company, though.
For that company.
Okay.
So what was it was Rule 101, and no, it's no violation.
So no violations since she contacted the managing partner and was withdrawn from the audit. But then we did say further, and this was in accordance with what Amanda said, is that if the offer had been made and she did not contact the managing partner and she sits out the year, it would be a violation of 101 because the offer could have influenced her work on the audit. Everyone see what I'm getting at there? It's not in the model answer, I'm just extending it.
What if she didn't immediately tell her manager? Maybe she waited 4 days and was continuing to do work.
Interesting. That's an excellent point Barry has. In my opinion, then, I would contact her and say, when was the offer made? Let's say this is Friday. Well, it was made on Monday. Then I would take her off the engagement and I would say, anything you did this week will have to be redone. Whether she's reviewing a work paper or she's preparing one. Chances are she's probably more reviewing work papers because I got the impression she was at a higher level. So somebody else would have to review those work papers that she did. Okay, letter H, Lorraine is a CPA, professor of accounting at a major state university. One of her former students recently sat for the audit section of the CPA exam. One day, oh, this one bothered me. Maybe it doesn't to you. One day, the student dropped by Lorraine's office and told her about many of the questions and simulation content on the exam. Lorraine was grateful for the information, which will be helpful as she prepares the course syllabus for the next semester. I remember this one bothered me, and I'll tell you why in a second. Okay, this is letter H. Let me see which one this is. Oh.
You're not supposed to divulge exam content if you take it, right?
Well, let me comment on this. What rule do you think this would be?
Hold on, did they take the exam with this professor? That's what
No, they knew this professor. They took the auditing section of the CPA exam, and then they're meeting with this professor, maybe about a different course, and they happen to, maybe the professor says, well, I understood you took the auditing section of the exam. How was it? And this person went into great detail about the content of the exam. Let me just comment a second here. Up until the exam became computerized, all of the questions on the CPA exam were available for purchase. I used to buy them. I used to go to DePaul University and they had them in loose leaf bound. And it was like, $5.50 or something. And they had the unofficial answers for all the CPA exam questions. Once they became computerized, they're not available to the public because they want to reuse them. But if you take Becker will have similar information. Now, I'm just curious. I don't have the model answer for this one in here because it's this is not in the new edition. They took this part of the question out. Would this be a Rule 501 violation?
I wouldn't, I don't know, when I take my exam, I'm gonna have people I know that are gonna help me out.
And ask you about it? There's no right or wrong answer. Go ahead, Barry.
No, I was going to say, she told her about the questions, and it's not like she, was taking pictures of the test, and, plus Lorraine's already a CPA anyway, so.
Yes, in fact, it might be like telling Becker, well, these types of questions were on the exam so they can better help prepare people.
Right.
So anyone think there's a violation here?
It's not like she was giving the information to somebody else that was about to take the exam.
Yeah, that's a good point too, exactly.
If I had a student telling me about one of the exams that you have to take to become a teacher, a content test or something, I wouldn't feel that's a violation. I wouldn't give well, actually, I would be giving specific answers out because that's but not in relation to the test, because that's part of my job is to educate, but, I wouldn't.
What about at your job? Lena, what about at your job? Let's say an instructor, it may not be in your discipline as much, but let's say like in math, has a couple sections and gave a pop quiz in the morning, and then students in that class tell the students that are in the same class in the afternoon that there was a pop quiz covering these questions.
I wouldn't. That wouldn't be okay with me. I would let the other instructor know.
Okay. Yeah, but I think it's different here. I would agree with you. As they said here now, as they said, I don't have the solutions manual for this edition. And in the new edition of the book, this part is not in there, this one. Yeah, I mean, I don't see an issue with it either. I mean, Becker is getting their information somewhere.
College
as far as
professors
to
tend
what's-
to, it's hard to keep current on how to best educate your students, so I would say it's great, you know, like.
Well, let's be honest too. For example, two of the persons who often contribute questions to the CPA exam were faculty members at Northern. And I'm sure that influenced both the CPA review course they have as well as the courses that they teach. You know, I mean, if I had insight on some of the auditing questions that's going to be on the next CPA exam auditing section, I would want to make sure I covered it here in the classroom, you know, to help better prepare you for the exam. So I think we're in agreement that there's no violation. It's no 101 or 501 type situation.
We're both on tape saying that now.
That's right, we have said that now and it's documented, that's right. Okay, let's look at letter I.
Sorry.
Yes, go ahead.
No violation and what?
No violation of Rule 501 or Rule 101 as someone pointed out, the professor is already a CPA, and this is just assisting her in preparing her students for the exam. Anyone else want to add to that? Something?
I mean, I could see like if she was, obviously they go places to take the test and you can have phones and all that, but if somebody was in the room while you're taking the test or something, like some type of.
Or what Barry mentioned, what if someone's using a camera phone they snuck in and they were taking pictures of the computer
That's
screen?
different.
But you can't anymore because the places you take the test, it's all recorded. They have people watching you.
There's always a way to cheat. I have high school students.
My sister works for Prometrics, and Prometrics, they have cameras everywhere. If they see a phone, you're out and you don't take the test.
That's a good idea, actually. There used to be, when we took exams in classrooms, there were all kind of techniques that people used. One person who used to give the exams closed book of notes in the classroom had taken answer sheets or stuff and had taped it inside one of the women's stalls in the bathroom, then asked to use the washroom during the exam.
What, every question?
I heard a
Well, for
story
certain
about
areas.
someone had a water bottle or a bottle like Barry, and then they wrote answers on the inside of the label so they could look through.
Someone had a pen, I think when you scrolled it, there was like a screen here where you could see different.
If students put their minds as much as they do towards cheating to actually learning, we could change the world. You know?
That's right, they would know without cheating.
Well, you know, it's further, it goes just further more than just with the students. You have accounting fraud, so these are students that eventually turn into cheating adults. So.
Yeah. Well, when I was in law school, we took a property exam. There were 3 sections of first year property law. We were in a big auditorium, and I was in section A, but 2 of the people in section C, closed book, 4-hour exam determined your entire grade. And they had a textbook open in the back row on the floor. So they cheated in law school. What type of attorneys do you think they would be in the profession?
Criminal.
Yeah. And dishonest as hell.
Oh, I thought you meant what type
No,
of
I meant they would be dishonest. They were cheating in law school. They're going to do any
Well,
cheating
it's
in
also
the
different
profession.
how you use that information as a professor. You know, you're not going to say, okay, this question says this. You know, you just use that to inform your instruction.
Right, exactly. So make sure you cover topics.
Right.
Okay, let's go to now Audrey. She's financial analyst in the Financial Reporting Department of Technologies International, privately held. Audrey was asked to prepare several journal entries for Technologies related to transactions that have not yet occurred. The entries are reflected in financial statements that the company recently provided to the bank in connection with a loan outstanding due to the bank.
203? 102?
203 and they have 102.
Yeah.
203 and 102. And they're saying the violation is Audrey knowingly included false and misleading transactions. She unknowingly included false and misleading transactions in the financial statements that were provided to the bank. In the financial statements that were provided to the bank. Because remember, it says here, she was asked to prepare journal entries that have not yet occurred. Later on, we'll talk about, and we'll do this in some of the online discussion in one of the subsequent weeks. You've probably heard about it. Keeping the cash books open and stuffing the channel, things of that nature, which are audit frauds that we'll see later on. And the last one of this group, but then there's some others I assigned, Austin and Houston is performing services to help management of McAllister to streamline its production operations. Austin and Houston structured the fee for this engagement to be a fixed percentage of cost savings that results once new processes are implemented. They don't do any audit or other services. So basically they're just doing consulting services, or maybe they're doing IT type work.
No violation.
No violation here. It is not the contingent fee issue. Remember, what that was, what, 302? Okay, I forgot the number. 302. It's not a 302 violation because it's nothing to do with audit services. All right, well, I knew we were going to enjoy that. All right, let's go on then. We have a couple more, 4-25. 4-25. Then we're going to go to the board. We'll go to the legal chapter soon. I've summarized it on the board. So we can go directly to homework there. Okay, oh yes, this problem's been in the book for years. Marie Janes, page 109. She's doing the audit of a large auto dealership, kind of like we did at Wolf & Company. She's not a partner. Sales manager tells her there's a sale at a substantial discount on new cars that's limited to long-established customers of the dealership. Because their firm has been doing the audit for several years, sales manager decides that she's eligible for the discounts as well. Now, obviously Rule 101 is involved here, but let's just talk about this. Does anyone think there would be a violation here? Or does anyone claim that there's not a violation?
I think there's a violation. Not a partner.
Expand upon that. I want to argue both views here.
Well, I just think that, I don't think you'll take her independence away when doing the audit because she's getting such a great discount on a car.
That would be the argument definitely in favor of a violation. Does anyone have any other perspective, though? That certainly would be the appropriate answer for the question. Remember a few years ago where General Motors had a special promotion where they said, you pay what we pay. In other words, they were giving everyone basically the employee discount. Or they say this sale is open only to long-established customers of the dealership. Every now and then, I used to, until recently, get a mailing from Zimmerman Ford in St. Charles saying, "Dear loyal customer." Well, I have never been to Zimmerman Ford in St. Charles. I mean, obviously they got a list maybe of attorneys or CPAs or something, so they sent these notices out. There was a special tent sale with the maximum discounts, highest amount given for your trade-in, etc. So the official answer is what Amanda said. We don't want to impair our independence because of taking advantage of something that may be of limited value. The only thing that, it's not just a customer employee discount, it said this was limited to long-established customers of the dealership. In reality, there probably is no violation, but for appearance purposes, it would be better if she did not buy a car from an audit client.
Yeah, because come next audit, she may be, she may not, she may be less likely to do
well, less objective or
right.
Something like that. Or maybe she is objective, but it's the appearance. Oh, I noticed your car has the Packy Web Ford sticker in the back, so oh, you bought it here and you're doing the audit, you know, that type of thing. The auto dealership has an executive. Now,